Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Happy Wednesday. We got CPI in the rearview mirror, but the inflation story, it isn't over yet here. We got PPI hitting at 7:30 a.m. Central Time, and the Fed pays closer attention to this print than most traders realize. These are the pipeline costs where the next CPI surprise is born. Yesterday's hot CPI really lit the fuse here. We saw the dollar index firm. We saw yields jump. Gold took a $138 round trip before clawing back into the close. And today's PPI pours either gasoline on that fire or finally gives the dollar bears their reprieve. So let's see here where we stand. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. It's Metals Minute episode 658. We're just under our goal at 22,000 subscribers. We got about 4 behind it here. So please help us grow this channel. Hit that like and subscribe button. Now checking out the precious metals overnight. Looking at metals, we got broad green across the complex here with silver and copper leading. You got silver futures up $1.97. It's up 2.3% here, sitting at 88.23, really extending yesterday's breakout, printing a fresh recovery high at 89.05 overnight. The structural breakout now is lasted about 3 sessions deep, and the ETFs, they're starting to join the party here, adding about 1.86 million troy ounces in that last trading session here. This is the biggest one-day increase since April 9th here, bringing the year-to-date net inflows at 68.9 million ounces. That's really institutional money starting to chase this move, not retail. So you look at the gold market here for June gold, up $20.50. That's up just under about 0.5%. It's recovering after yesterday's, again, wild range here, $138, with the overnight highs at $47.34.80, the lows at $46.92, holding above the reclaimed $4,700 shelf, but still below that breakout level here, that conviction trigger that we were looking at above 47.75 that failed here yesterday. The gold silver ratio sits at 53-1 here. It's really a risk on, and it's tightening further from yesterday. Silver continues to outperform gold meaningfully, and this is the cleanest risk within the metal signal we've had in weeks here. Remember, as you get that higher gold silver ratio, you get traders buying more gold here, silver really lagging, and what we're seeing is the opposite taking place, and silver really going risk on. Now you got the copper market, and that's been the driver of the silver market recently here. We got that front month holding above 665 here. It's the leader in the complex here. Yesterday's 665 close was the highest single day volume on the chart here, and confirmed that breakout over 662, that February contract high. So a potential path here to 675, even $7 is open. So if you're watching this and you don't already get access to the precious metals chart pack, you're kind of trading half blind here. It's free. It lands in your email box here just after the close here with some actionable levels here. Sets you up for the trading day ahead here. It's exactly the same levels that we work off on here. The link is in the description. Takes about 60 seconds here to register. So looking at the cross asset picture here, and this is the first thing that I check on every single morning here. I'm looking at that checklist. Where are the energy prices? Where are the 10-year yields at? And where are the FX markets? Because a lot of times that's your setup for the next day here. So we do have crude oil futures sitting at $101.30, down about 87 cents here, just under about 1%, really easing after yesterday's surge. It's the Middle East headlines still driving the tape here. Hormuz disruptions here remain that structural bid in the market. You go to the EIA expectations, because we will have an inventory release today. They're expecting a 2 million barrel draw, a little bit lower than last week's 2.3, a larger draw than what would be expected here. Could supply and extend that supply tightness narrative, and a build would here crack some of the bullish thesis. Now you look at the December crude oil contract, really showing you that curve here, screaming backwardation. You got it at 82.91. You got the front month at $101 here. So trading about an $18 differential between the two. So the market is pricing in some supply normalization by year end, but it's consistent with the EIA's Brent $89 Q4 forecast, and then also Goldman with that $83 forecast. We're really seeing 80 to 85 as more of the normalization, as a lot of structure over in the Middle East has been damaged. Long-term effects, no telling how long it's going to take for things to get back up to those pre-war levels. Now you look at natural gas really going nowhere. The storage is 7% above those seasonal norms. We've got some milder weather. We've got softer LNG feed gas here. No real catalyst going on at the moment here. Looking at that market for more of a bottoming formation before heading back on up here. And the yields, well, they're higher for longer with that rising inflation. Excuse me. You got the 10-year yield sitting at 4.46, really holding the highs after yesterday's CPI-driven spike. 2 cuts for 2026 are essentially priced out of the market. Then you go to the FX markets, you look at the dollar index here, up 24, 98.42, firmer on that hot CPI. That Hormuz risk here, the headwind for the metals, really didn't get the memo here because of the fact that we're seeing those silver and copper prices continuing to power forward. I wrote an article again on a sulfuric acid, that export ban here from China. Also, those supplies failing to move through the straits here of Hormuz, and that's really what is causing this above ground crisis going on in the copper market. Now, again, you get the British pound here. You got some soft, it's a little bit soft here. Despite that sticky UK inflation, the dollar carry kind of winning at the moment here. You go to the euro currency, it's really pinned. You got the US-Germany spread, still favors the US dollar here by 155 basis points. Now you go to the equity market here ahead of the open, you got Jensen. He jumped on Air Force One. They're making a lot of discussion about the Alaska. The deal is the reason why they stop in Alaska before they go over there is so they can refuel, get things going in case they got to get out of Dodge quickly when they get over to China here. Once that meeting ends, they're going to want to jump right on out of there. So this is the story everyone's talking about. Trump confirmed that Jensen Huang is on that China delegation after CNBC reported he wasn't. So Huang flew into Alaska last night, jumped on Air Force One. He's there with Musk, Cook, Fink, Schwarzman, Solomon, several other major players out there. And hey, one or a few of those big guys might have had a trading account with me here at some point in time. So looking at that summit here, Thursday, Friday, got NVIDIA up about 1.5% overnight. Given the China revenue collapse to essentially zero last quarter, any thought in the discussion about getting those NVIDIA, those processors, the chips, those big data centers here, getting some of that NVIDIA love here, really could boost this market. So the S&P 500 up 20 here overnight. The NASDAQ up 248, tech leading, especially when Jensen jumped on the plane here. You got the Russell edging a bit higher. The VIX really calm here despite all that geopolitical noise. You go over to Europe and Asia. Well, the European stocks, they did rebound here from the previous session losses. Investors, they really kind of pared back after some of the earnings reports, and then futures started to broadly rally with technology. Then you get the Asian equities, they're climbing here as the rally in South Korea. It did offset that Taiwan sell-off here with the MSCI Asia Index here jumping 0.3%. And then you go to Korea's benchmark gaining about 1.7% here. Japanese stocks, they extended their advance for a third straight day. You look at the ag picture because these are other commodities that are on my radar. If you've been working closely, chances are you might have had a lot of exposure to some of the ag markets here recently, especially with the precious metals, just in a hiatus here until getting this renewed birth here last week. So looking at the commodities on my radar, looking at the grain markets, you do have beans up about 2.5 cents here, and probably perhaps some rotation of the bean market ahead of that China meeting. So with Trump, dozen other CEOs heading to Beijing here, soybean, that trade gets a little bit interesting. Any agricultural purchase headlines here out of that summit could rip those beans higher here, or they could disappoint because the markets, a lot of times, they'll price in what those expectations are, and anything that falls short of it, you see that liquidation take place here quite quickly. So you look at that USDA reaction, corn, it was a bit mixed here. You had the new crop U.S. ending stocks slightly above the estimates here. World stocks below the average. The yield cut to 183 bushels per acre here. Prices, they closed about 2 to 4 cents higher. You go to soybeans, it was friendly here. U.S. ending stocks here, they were higher. And then you look at the world stocks here, they were tighter than expected. It was wheat, that was the bullish surprise here. 2026, 2027 U.S. ending stocks here, 762 million barrels, hit that low end here. And what you're seeing here is that This is all the results here were the lowest of the pre-report guesses here on that plains drought and that freeze damage here. Prices, well, they jumped about 40 cents higher, and managed money likely flipped from short to long on that type of headline here. You go to the crypto market here, you got Bitcoin kind of recovering after yesterday's CPI driven dip here, sitting at right around 81,400. Ether lagging Bitcoin here, really flat, $2,290. And then here's what to watch here today. The earnings, it's really light. It's macro focused. We're going to have that core PPI. We'll have the crude oil inventories. We're going to have that Fed chair nomination vote here. We're probably going to see that pass. We'll have a 30-year bond auction. You got two Fed speakers coming out, Collins and Kashkari. And really the bottom line here, taking a closer look at the metals heading in to the PPI. It's really silver and copper. They've been doing the heavy lifting here, ignoring that dollar headwind here, and that's really your tell. Gold is really kind of the wild card after yesterday's big range. Any hot PPI could confirm that inflation narrative story and the possibility that futures go and retest yesterday's low, 46.65 again here. That cool print really gives gold a run and a potential chance to reclaim 47.75 and extend that breakout here. So looking at the levels here, really not so much the headlines. You guys got any questions? Again, it takes about 30 seconds here. Sign up, chart pack in that below here, sending that out after the close here, giving you the levels and a setup for the day ahead here. Also, one of the things that we've been sending out, navigating the weekend, gives you some of these headlines that are laid out on what we're watching here, all the expectations on the data coming out. So again, shoot an email, phil@bluelinefutures.com or info@bluelinefutures.com here if you like to open up a futures trading account. And remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.